Hi everyone, it's Ola Sulaiman. It's Friday again, and I'm just trying to set up the Instagram one. So 1 second. Where are you live? Yeah, that's live. Hi. So it's Friday today. On today's show, I'll be talking about expenses you could claim as a sole trader, as a business owner. Now, what's happened? I've not put my microphone on, so 1 second. I have to apologize for being 3 minutes late as well. So I'm just going to continue. So today I'm talking about expenses you could claim as a business owner. Usually this is very, very important, and this show is especially for those of us that are trying to submit our self-assessment returns and you don't even know where to start from, and you're thinking, do I really want to do this? This show would help you to realize that you can't do it by yourself, you need help. So it can go either two ways. However, before I go on, my name is Ola Sulaiman. I'm a chartered accountant and tax advisor. I run my own business, try to advise business to ensure that they claim the right amount of expenses, they claim the right amount of tax, and they do the right thing. Because what usually happens is most people will tell me I didn't know the right thing, that's why I didn't do it. However, that's not an excuse to HMRC. So getting it right is very important. And I think that's why it's good to actually get help to do it for you as well. So why do I do this? I've said that so that you can know what you should be doing. If someone is helping you, you can ask the right questions rather than just saying, oh, I trust my accountant will do the right thing. So if you'd like to watch more of the videos I've done in the past, you can go to my YouTube channel, which is Ron's Accountant. It's got loads of tax advisory videos that you could watch that would help you. Because usually when you've caused the problem, when that problem has happened, then you then need to pay a tax specialist, a tax advisor, a lot of money to help you to resolve it. So it's better, prevention is usually better than cure. So I'm just going to go into this week, and usually I try to talk about my week, how it's been, what's happened. However, I'm really out of time today. My week has been fantastic. It's been very busy as usual. I've been training. I've been trying to raise money for my course this year. It's 2 more weeks. And thank you to everybody that have sponsored me. I really appreciate you. You're the best. I'm still 17%, so please help me. So I'm just going to go into today's show. So now, this show, like I said earlier on, is especially for those of us that do our self-assessment ourselves, or those of us that have a business and then someone is doing it for us, but we don't actually understand. I remember several years ago when I first started my business, and one of my clients then sat in front of me, and my own principle is anything you sign in, you need to understand it. So whether you're listening or not, I'll still try to make it as simple as possible for you. And I started explaining to this man like, oh, this is what this means, this is what this means. And he listened to me quietly, and I got to the end, I was like, is this how you explain to everybody? I was like, yeah. And he said, don't waste your time. I didn't understand anything you said so far. I understand what he was trying to say. However, I don't want a situation that in future, you'll be like, oh, I didn't know about it. So that's my own personal ethical behavior. I want you to understand tying it to some extent so that you know what you're signing. Because what we accountants do as well is we give you a letter to sign that you are the one that provided us all this information, just to say we don't know about what you're doing. So if that's the case, then I need you to understand what you're signing. That's me personally, that's how I roam. So self-assessment return, the tax you pay, it depends on 3 things: your income, your expenses, and the relief that's been claimed for you, the tax relief. I've seen people in the past come to me and say, oh, my friend paid so amount of tax, how come I'm paying this much? And I usually say, until I see the accounts and see what this person has claimed for this, your friend, if your case is the same and they are paying so tiny amounts, there's something wrong somewhere, but that's not because they're not my clients, I don't need to worry about it. So it's the same amount of tax we all are expected to pay. If you're a basic band taxpayer, you pay 20%. If you are a higher band taxpayer, you pay 40%. If you're an additional band taxpayer, you pay 45%. So the only difference is what is the tax relief you've claimed, what is the expenses you've claimed. So because of that, there's no magic about it. However, when someone is not trying to be cutting corners, claiming things you should not be claiming, obviously you will pay a lower tax. However, I usually tell everyone that I come in contact with, like, it is your personal tax. It is your company's tax. It is not the accountant, it's not the tax advisor. You are responsible. So, three things, like I said: the income that's been earned, the expenses, and then the tax relief. So in this video today, on this live show, I'll talk about the three things. So I'll start from the income. Now, your income is, so if you're just the sole trader, your income will be all the money you've received from the business. So every time someone has paid you, they've paid you because of that trade you're doing. Now you'd say, oh, that's very simple, that's very easy. I could just say this is how much I've earned. Apart from doing accounting work and tax advisory work, I actually help in tax investigation as well. And in that case, I'll be like the person supporting the other person, and then we try to resolve between us and the HMRC, trying to make sure that everybody's fine in the end. So what they usually want to say is, don't just tell us that you've earned this income. We want to see the proof of this income that you said you've earned. So if you have a business account, it has to be a business account. I know for sole traders, it's not compulsory to have a business account. However, I usually say it is better to have one. And for me, the main reason is investigation. As soon as someone is trying to see what you've done, probably they're trying to ask a question about something else, and all of a sudden, you're giving them your personal account, and then they've seen where you've been on holiday, they've seen the clothes you've bought, they've seen what you've done, and then we're all human beings. If I were in their shoe, my judging spirit will come up straight away. Will be like, oh, okay, I need to look into this person more. But if it is your business account, it's just the income they're seeing. They like to see the invoices you've issued. Now, in some cases, I've seen a case that they'll literally go to that person that you've said has paid you that amount to confirm that that's the amount that you've collected from them. That's usually serious situations. They will literally send a letter to this other person, your supplier, and say, so person is your customer. Can you confirm how much you've paid them, the businesses you've done, the contract, and in that case. So what I usually tell people that collect income, sole trader, limited company, everything, it is a two-way thing. It is not just you that is keeping the record. Somebody else is keeping the record. And HMRC can go to them and say, can we have a record of what's happened? And normally what I say is, it's usually like Lego bricks. Everything is just being arranged, and at a point, it's just a tiny one that will just scatter everything, and then you get to the point of, you know that you've done something that is wrong. And usually people don't actually know they have done it because they've relied on someone to help them. That's the case. But I usually say they know, kind of, no matter what's happened, they actually do know. So for income, record keeping, making sure that you distinguish between your personal and your business, make sure that the right amount of income is written down rather than something else. So that will take me to expenses, because the time is flying. I don't know, Friday's time is just like running. Probably it's because he wants us to stop working for the week. So I'll go to expenses. Now, expenses, three very important things that you should always remember if you're trying to claim expense. First of all, before I go to expenses, I forgot something. Sorry guys, that's why I have to keep looking down. Now, if you are not just a sole trader and you're employed somewhere else, you have to include your income from that somewhere else. Even though that income has been taxed already, you have to actually include that as well. Because what HMRC is trying to see is your self-assessment is everything that has to do with you. So your dividend income, your rental income, your bank interest income, every single thing has to be included. Because what happens is, if you don't add these other things, it will not show when you get to the band that you're supposed to be paying 40% tax. So let's just say you just included your sole trader income, and all of a sudden somebody has taxed your other income at 20%. That means you've done something wrong. And what I've seen in the last 3 years, HMRC system is getting more fantastic every single day. And because of that, they would literally see you like, yeah, your self-assessment return is not complete, so therefore can you confirm if this information is right or not? And then you go on and say, yeah, you're right. HMRC, oh, thank you, you should have paid us £300 extra tax. However, because you've submitted an incorrect self-assessment return, we're adding 30% interest on that. We're adding 30% penalty rather. So because of that, it's very important that you put all your income, everything together into that self-assessment return. So I'll then go back to expenses. So for expenses, you have to make sure that it means three things. The first one is, it is totally, wholly exclusive for the business. You'd say, how is that possible? I'm just saying, you have to make sure that that expenses you're trying to claim does not have any personal use in. You've not tried to enjoy some personal benefit. And this can be very difficult at times because some of these expenses are, they have dual use. A very good one I've seen so far. Someone trying to claim uniform expenses. No, not uniform expenses. Yeah, uniform expenses. And they'll say, oh, I've got clothes from Mark and Spencer. I've got clothes from that shop. And this clothes, I've worn it for work. So I should be able to claim expenses. I bought this shoe. And I usually quote this court case that happened in the past. This court case was, a lawyer was trying to claim a suit that he wears to court as an expense. And HMRC has gone and the court supported them saying, so let's say you didn't have to wear the suit, wouldn't you have to wear clothes to the court? So it was disallowed. So anything that is doing two purpose, you're not allowed to claim it properly. So first one, it must be wholly exclusive for your business. Number two, it must not be a capital item. I will explain this later on. It must not be a capital item. It must be wholly and exclusive for the business. So that takes me to the expenses. I'm trying to remember the third one now. And then you must keep record. I'll come back to that one. Now, expenses are different, depends on the business you're running. So everybody is different. The expenses that I would claim is different from the one you can claim. Now, what I usually do is when I have a client, I try to understand their business. So when I say a particular expense, like, yeah, that's true, that's related to business. However, if I then see someone else, I'm like, why is she trying to claim for that? Why has she used her business account to pay for this? I know immediately that this is not a business account, and then I'll disallow it. However, the disadvantage of that is if you've gone on and used your business account to pay for loads of private things. I've seen a Butlins expense in a business account before. I've seen so many things. If I'm HMRC and I'm looking at your bank statement, I'm seeing all these things, I'm like, okay, I need to see this person very well because I know this person has done something they should not have done. Anyway, so I'm just going to give examples, and in these examples I'll tell you different things on that as well. Thanks everyone for joining me, and some are even waving. I'm waving back as well. Thank you. I've got 15 minutes and I've got so much to talk about, so I'll just keep talking. So accountancy fees. Now that's very, very simple and straightforward. That's our favorite one. We like to collect accountancy fees. Yes, I know. However, that fees you're trying to claim must be related to that business. Because it's possible that, like I said earlier on, I do investigation as well. You trying to claim accountancy expenses when it's actually related to your tax investigation for doing something that is wrong. Or you trying to claim accountancy expenses for a tax planning that the accountant has done for you. So however, if it's related to the business, fine, you're allowed to claim it. For example, your accounts, yes. Self-assessment return, because you're a director of that limited company, you need to fill a self-assessment return. So definitely that one is fine as well. But however, any other thing that is not wholly exclusive for your business, you're not allowed. Now, legal fees has to do with the business. I've seen some people trying to claim immigration fees and say the reason why I'll be able to work is because I need to pay for immigration. No, I'm sorry. It has to be related extremely to the business. So let's say you've paid a lawyer to do some documentation for you. You've paid, anyway, you know your business more. what you could pay. So any type of legal fees that you've paid in your business is allowed. Now, staff wages, this will take me more time. If you're a sole trader, you're not allowed to claim staff wages because it is your personal tax. At the end of the day, even if you pay staff wages, you would have to add it back. So you're not a staff, it's your sole trading business. You should not even be thinking of adding that to it. Any money you withdraw out of that business as a sole trader is actually, it's going to be your drawings, and then you should be paying tax on your drawings. So you can't say you're paying staff wages, because the staff wages, if you try to put that in, it will reduce your tax that you're paying on the long run from your profit. So because of that, you can add that to it. So, however, if you've got a limited company and you're running payroll, you have to run payroll first before you can claim director's wages. That is very important as well. If you don't do that, you can then go on and say, I want to claim wages. Now, if it's staff wages, like you've employed someone, the wages has to be, you have to run payroll, you have to declare real time to HMRC that you're paying the person. If you've paid insurance, you can claim that as well, national insurance for that person. If you've paid payroll fees, accountancy fees, you can claim that as well. However, let's say you're employing your family member, you have to ensure that that money you're claiming for them, or that money you said you've paid to them, because to be fair, most of the time we literally just say we're paying this person when we're not actually paying them. It has to be a very fair amount. You can't just say my wife because she's my wife, even though she doesn't have the experience and qualification, I'm going to pay her 100,000 in a year. So you have to make sure that is the market rate of what is going for what she's doing at the moment. That is what you're trying to claim for this person. So staff wages, and then if the person is a sole trader, you're not running payroll for them, and you yourself are a sole trader or you've got a limited company, then they're not your staff. They're like subcontractors. In that case, they need to give you invoice for the work they're doing for you. You need to keep record of that invoice and of the payment you've made to them. So that is very, very important. Yeah, so as soon as you're not doing that, and usually I say you need to keep record of their unique tax reference number to show that they are allowed to actually do the work they're doing for you. Because anybody that says they are sole trader, they will be registered with HMRC. And when they register with HMRC, then you can back yourself up and say, this person is registered and they're sole trader and they've given me invoice, and that's why I'm trying to claim this expense. Without all this, if an investigation comes in future, you'd have to defend yourself. You'd have to, I don't know, prove beyond doubt that it actually happened. And I know I keep talking about investigation. At times these things takes 2 years, 3 years. And until both sides are happy, it doesn't stop until you go to court. So you don't want yourself to have unnecessary headache of things that you could have actually helped. And I know usually you say, I've been doing that, my accountant has been claiming that for me, there's not been any problem. What I've seen in cases is these problems do not happen immediately. They happen years after you've done it. 6 years, 7 years, 8 years, and then you're worried about things that you've done a long time ago. And another thing is you can't even remember the information very well because it's happened that far away. So I don't know. So you need to make sure that you keep record of these transactions. Now, my favorite one, travel. Okay, I'll come from a sole trader point of view. If you're a sole trader, travel from, not just sole trader, anybody, travel from home to your place of business is not allowed. I'll say that again. Travel from home to that place of business is not allowed because it's general commuting, except if it falls on that temporary workplace. That would be a story for another day. If it falls on that temporary workplace, then you can claim the expense. And for a temporary workplace, it has to be somewhere that you've not been working for 2 years or more. So you have to be very, very careful about that. Usually the best way for me, and this is usually my advice, is mileage. I'll keep mileage. If you're working with your limited company and you're going to a temporary place, yeah, you're allowed. However, you have to be very, 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 very careful. If your staff travel, they can keep mileage. However, if you travel from one business to another business, yes, you can claim mileage. It's very, very complicated. Another thing you can claim for that one is actual expense. So let's say you've traveled on a train to go and work somewhere, yeah, and it's a temporary place of work. You can claim the train ticket. Let's say you've traveled somewhere on the aeroplane for business purpose. Yes, you can claim that. Now, what I've seen in the past is people say food expenses. I want to claim food. The way I explained the clothing earlier on, I said anything that has dual purpose, you can't claim it like that. So if you're not working, won't you eat? You will definitely eat. So because of that, you can't just say, I want to claim food. I want to claim a lunch. I will have lunch, work or not work. So because of that, if you want to claim food expense, it's actually referred to as sustenance. And the way it happens is called travel and sustenance. The reason why you're claiming for that food is because you've gone somewhere to work. You've traveled somewhere to work. And as a result of traveling to this place, that is why you need to eat that food. You're sleeping in a hotel or hostel or B&B, Airbnb or anything. And the reason why you've done that is because you need to go and do a business deal. You need to go and work. So everything together will come together. So it shouldn't just be the food. To be your travel and the sustenance and everything all together. So if you'd like to read more or watch more, I've got a YouTube video, I think 1 or 2 on my YouTube channel, runs this account about travel. If you're not sure, check and be sure that you're claiming the right thing. And that takes me to using your home for business. Oh my God, 5 more minutes. Now, I've seen this and that actually made me laugh one year. It was actually an account that an accountant had done, and what they wrote there is mortgage expenses. And I was just like, oh my God, if I'm HMRC, I don't even need to look through the account. As soon as I see mortgage expenses, I'm interested in your account. Because you can't claim mortgage expenses on the business, except if the business, it's a whole building used for the business, and then you're paying mortgage expenses. You can't claim the whole amount for your mortgage or your rent on your business. It has dual purpose. If you're not running the business, you still need to live somewhere. If you understand what I mean by the dual purpose now. So rather, you have 2 options. The first one is either you decide to then use calculate the actual thing. Now by doing that, all your mortgage expense, interest. Now if you're a repayment person, you need to find your interest only. So it has to be interest only. So your interest, your council tax, your insurance, electricity, gas, everything added all up together, any home expenses, everything added up together. Then you count the numbers of room in the house, including your kitchen, your lounge, at times the bathrooms, depends on how big it is. And then you apportion a particular room. So if it's 3-bedroom house, the kitchen and everything 6, 1/6 times that year amount. And then that room, except if that room is specially your office, there's no other reason, there's no other use for that room. That's the only reason why you can claim 100% of that expense I've just said now. However, if it's just once in a while, then you then need to say, okay, I use this room 50% of the time for business. Or I use this room 70% of the time for business. And then you claim that. In that case, you then need to keep a record of all these expenses I've said so far. Because I've seen a case that they would want to know how much you actually paid. Things are very easy these days. You can just go to your electricity person and say, can you tell me the amount I've paid so far? Or you go to council tax and ask how much you paid. And then just be sure that you're claiming the right amounts. Depends on the area you live as well. So if I'm HMRC and I'm looking at a business in London, I know and someone that lives in Northampton where I am is trying to claim the same amount for use of home, I'll literally need to look and say, why is this person trying to claim that kind of amount? And what happens with HMRC is usually we all submit our accounts, and it's just something that will just trigger a bell, and then they want to look into everything, and that might be 6 years down the line. And if you've done that mistake 6 years down the line, most likely you've done it again previous years. So then the person is interested in your 6 years account, and then they want to know what you've done or not. So we need to keep record. Another way of doing this is you could say my room, this particular room, could cost £100. You should be able to prove that actually if you're renting the room at the market rate is £100. If you can't prove that, I think the best way is to go with my first option. Now another mistake people do is if you have a place, an office, For example, I do have an office, and all my office expense obviously is allowed as a rent. I'll come to that in a minute. However, because I've got this place of business, I can't then go again and claim use of home as an expense. Because the reason why I'm using my home for business is to kind of make my life easier, kind of, because we all like working from home. Or, I don't know, you can't claim two at the same time. Because the reason why you're claiming home, you should actually be at the office that you're claiming the expense for, not the two at the same time. So you need to be careful about that as well. Insurance, you can claim for your professional indemnity insurance. You can claim for your employer insurance. You can claim for any insurance that relates to the business. Go on, claim that as well. Training, this is my favorite one. Any training that you do that is adding a new qualification to you, any training that you do that is making you better than what you have right now, that is adding more value to you, please do not deduct, because most likely it's a capital expenditure. The trainings you can deduct are trainings that you have to do because of your profession. You have to do it to update your knowledge. So it's like a continuous professional development kind of training, not a new entirely. It has to be related to what you're doing at the moment. If you want to watch my video on that as well, I've got one on YouTube too. You can watch that. My YouTube channel is Runs as Accountant. Marketing, networking. If you love networking, yes, you can deduct that as well. So we love networking. Doesn't matter well if we eat there or not. Online marketing, all those SEO, all those things that we pay for, Facebook ads, everything all together, Instagram ads, you can deduct all this out. Now, motor expenses. If it's a van, I know it's more than 10:30 now. If it's a van, you can deduct all your expenses because your van is not your car. You're using the van for business. However, if it is your motor car, you can't deduct all the expenses. Number one is you can't claim travel and then come and claim motor expenses at the same time, except if it's totally different from each other. You can't do the two at the same time. So if you want to claim motor expenses, all your car payments, insurance, motor repairs, everything all the time, all those kind of expenses that is related. However, you need to apportion for your private use if you're a sole trader. Now, if you're a limited company and your company is giving you a car, you don't need to apportion because you're still going to pay for car benefits. So that's where you get the punishment. But if you're a sole trader and you're trying to claim all the expenses, then you then need to apportion your private use. How often do I use this car for my business? How much mileage have I done? So you need to do that just as to make sure that you're not claiming your personal expenses in your business one. Now, telephone expenses. If you have an office mobile, your business has got the mobile for you, and it's mainly for office, no other reason. You can claim the whole amount. If it's a personal one, you need to apportion for private use. If it's and I know it's very, very cringy now because even my personal phone, I use it all the time for business, like almost all the time. I'm on Instagram, on Facebook, and I'm trying to do everything all together using my personal phone. However, I still need to apportion for private use if I'm trying to claim that as well. So, but the one that is very, very funny is the landline. If you're trying to claim landline, for example, if you have a Sky. Now, when Sky gives us bill, it doesn't say this is your telephone. It doesn't say this is your, at times it does anyway, but it just deducts the whole amount. Except if you can say this is TV bill, this is landline bill, this is internet bill, and you can differentiate between each part of the component of the bill. Just forget about that expense. However, if you can do that, just apportion private use and business use, and then you can deduct that as well. Now, rent. If you have a business place like mine, office, you have a virtual office that you pay for, you rent in a room, you rent in a meeting room, you rent in a place, a factory, a warehouse, anything that is just mainly for business, you can deduct every single thing out. Bank charges, you can deduct bank charges. However, what I've seen is people trying to pass through their credit card interest through the business. Even though if you've used the credit card to pay for business, there's another way to go about it. Don't try to claim interest or your payment or your monthly payment through the business. I said, yeah, the reason why I have the credit card is for the business. You're two different people entirely. Except if you're a sole trader. Even with that, you still have to tread very carefully. So, in conclusion, I'm sorry I'm running out of time. I've said expenses vary from business to business. You have to ensure that the business expense you're claiming is wholly exclusive for the business. You have to keep record of all these things. And I know when we talk about keeping record, it's not literally keeping receipts. I don't like doing papers these days. I literally just scan, upload somewhere, save. So take a picture, use your phone, scan, keep somewhere. That's it. You don't need to keep paper record again. We've moved on from that. That item that you're trying to claim must not be a capital asset. That's the third condition. That expense you're trying to claim must not be a laptop, must not be a computer, must not be a car, must not be a table desk, something that can last you for more than 2 years. So then you say, what do I do then? It's still, I'm using this for business. In that case, you need to add that to your plant and machinery or something. However, if the item you've bought qualifies for capital allowance, you can claim a tax relief for that. If you'd like to watch more about capital allowance, I've got 2-3 videos on that as well on my YouTube channel. I told there's a gold mine, runs as accountant. You can watch that too. If it qualifies, then you can then claim that relief on the long run. So you're still enjoying the tax relief like an expense, but you can't pass it through as an expense if it qualifies. So for example, if you have a van qualifies for capital allowance, you can definitely take that out on the long run. The only thing about capital allowance is if you then decide not to run the business again, you need to pay back the capital allowance that you've claimed at that point in time. So I think I've come to an end for today. I hope I've been able to trigger one light or the other. If you think that anything I've said today has made you think twice, like, am I doing the right thing? I think I've made a mess. There's good news, especially if you've submitted your returns. You can actually go back and resubmit your returns. Yeah, especially if it's 18 and 19. I'm not talking about previous years. That's another different way. You can actually go back and redo your returns and submit the right one before HMRC themselves picks on the mistake that you've done. And then you're thinking about penalty. Or if you think you need help, please, I usually say get professional help. I know DIY people like us, we feel like, why would I want to be an accountant? I can do it myself. But I can assure you, to pay a tax accountant or pay a tax advisor for an investigation that takes more than 3 years definitely will cost you loads more money. If you'd like to enjoy 30 free minutes, you can contact me. I'll put you on the right path. If you'd like to learn more about these little things, there's loads of video, like I said, on my YouTube channel. And then finally, I usually try to talk about my course. I am doing Aquathon this year to raise money for the food bank and the foundation, my foundation, which is the Ronzo's Foundation, which deals with children to make their life better at school. Thank you so much. I hope you've learned one thing or the other. And I hope you enjoy me next week as well. Thank you. Bye. Have a fantastic weekend. I forgot that. Bye. Finish. Where are you? And